my name is Neetu Yadav. Welcome again to Vakilsearch video series on FEMA and RBI related compliances. Today the topic will be on the general overview and summary of my FEMA series. So let's get started. Under FEMA, all the transactions which includes foreign exchange are being classified either as capital account transaction or current account transaction. If you can recall my previous videos, I've been spoken about mostly on capital account transaction, which also involves in-depth knowledge of Companies Act as well as Income Tax Act. So let's understand the meaning of capital account transaction in a very simple and layman language. Capital account transaction. According to Section 2E of FEMA 1999, capital account transaction means a transaction which alters the assets or liabilities, including the contingent liabilities outside India of a person resident in India, or alters the assets or liabilities in India of a person outside India. I have majorly covered my knowledge and experience on the following reportings. Number 1, foreign direct investment, that is also known as FDI, which includes the fresh issue or transfer of existing equity shares, compulsory convertible preference shares, compulsory convertible debentures of Indian company, and contribution to LLP, etc. The Indian party have to do the reporting in either Form FCGPR or FCTRS as per the applicability on firm's portal. RBI has given most of the authorization to review and approve the FDI application to the authorized dealer banks. FLA is the annual return that needs to be done by 15th July every year. Number 2, external commercial borrowings. ECBs are the borrowings of funds by the Indian companies from foreign sources in form of loans, bonds, and other financial instruments. Indian parties have to do the reporting through authorized dealer bank offline. ECB2 is the monthly reporting that needs to be done within 7 working days of the closure of the month. Number 3 is overseas direct investment. The investment is made by Indian party or resident individual in foreign entity. The concept of joint venture and wholly owned subsidiary company is substituted with the word foreign entity. Now the reporting is required in offline mode via authorized dealer bank in form FC. Earlier the form was ODI form. There is another annual return which has to be filed as an FLA by 15th of July every year. There is one more annual return which is an APR that has to be filed by 31st December every year. As per my own experience and years of learning, I want to share some important points that you should take care before bringing the investment or borrowing in India or even making the investment outside India. Number 1 is sectors. In case of FDI or ODI, sector or industry in which the Indian entity or foreign entity is running its business. Since based on sector, it will be decided whether the investment is allowed fully or partially or via automatic route or approval route or is prohibited under FEMA. Number 2 is country of investor. If the investor belongs to a country which shares the land and border with India in any form, whether it is an entity which is registered in that country or if it is an individual who is a citizen or a beneficial owner in that country, in that case, the investment will be brought by the approval route, that is, prior approval from the RBI is required. Number 3 is type of security. Depending upon the type of security, the reporting requirement will be changed. Like if the investment has come against the issue of equity share or the CCPS or the CCD of the Indian entity, the transaction will be considered as FDI and the reporting will be done either in FCGPR or FCTRS. Otherwise, in case of other securities, ECB guidelines will be applicable accordingly, the reporting will be changed. Number 4 is authorized dealer bank. Choose your authorized dealer bank consciously and be in coordination with them during, before and after the transaction. Number 5 is professional guidance, and one of the most important point, please take a proper help and proper guidance from a qualified company secretary or a qualified chartered accountant who can also help and understand and educate you in other relevant compliances like Companies Act and Income Tax Act. Number 6, due date. Make sure we are following the due dates of each reporting since the delay will incur late submission fees. As per the new guidelines and the new metrics, Rs 7,500 is the minimum late submission fees on FCGPR, ODI and FLA reportings. With this, I would like to conclude my last video on FEMA series. Thank you so much for watching and being part of this series. Do not forget to subscribe our channel and like this video. Thank you.